Hello and welcome to my interview today. My name is Susie West and I am interviewing Bertram Meyer, CEO at Taulia. Hello, Bertram.
Hi, Susie.
Great to be here in San Francisco with you. Really just wanted to get a read of what's happening in the dynamic discounting and supply chain financing market right now. So if you could share with us a few thoughts as to what you're seeing in the market.
Well, I think the market is still relatively young, and what we're seeing is huge levels of adoption, meaning new Global 2000 or Fortune 500 customers deploying dynamic discounting or supply chain finance solutions for the first time. So there is an ever increasing penetration. In the case of Taulia, that is reflected in signing up 7 new customers of that size per quarter. So we're at a run rate of 30 new a year right now. I think there's compelling reasons that this is happening, which is buyers with a lot of cash, excess liquidity, and in all cases, extremely low cost of borrowing, and then a supplier base that is increasingly starved and desperate to fund their working capital requirements. And that is partially because payment terms have been getting longer, partially because due to Basel III and other regulations, banks need to reserve more core capital to lend to small businesses. And so bank lending is not up to its standard, and in some cases, Southern Europe, etc., it has almost broken down or dried out. And so the indicator for that is a factoring market that's jumping into that gap, but factoring is incredibly expensive, so it doesn't solve the supplier's problem for affordable working capital finance, and dynamic discounting and supply chain finance solve exactly for that, whereby the traditional supply chain finance solutions are typically limited to your top 50, maximum top 100 suppliers, and dynamic discounting has the great advantage to scale across the entire supplier base, all spend, all suppliers globally. And so it's a way to earn double-digit risk-free returns and provide liquidity.
Are you seeing more of an appetite for dynamic discounting and supply chain financing in a particular region, or would you say it's pretty much globally the appetite is stronger than it was this time last year?
Oh, I think the appetite has gone up on a global level. We get a lot of inbound that not just from North America, but from Europe, of course, and then also from Asia Pacific and Latin America. However, I know Europe and North America better as markets, given that, that's where we are present. And right now we have to decline a lot that comes from other jurisdictions just because we need to keep our focus. But the demand, I think, has gone up unilaterally, and the tool would be extremely valuable in Latin America too.
So let's hone in on a couple of industries, if we will. When we were talking earlier, you were mentioning key industries like the utilities market and the car manufacturing market. Maybe you can just tease out a couple of clients that are working with you and they're doing some really exciting things with Taulia.
Yeah, you're mentioning the right industries. Due to the network effect, when you have a key anchor customer in a certain vertical, a natural next step is to go wider in that vertical. So our customers represent 66% of the Canadian telco market, or 3 out of 5 car manufacturers, global car manufacturers that are headquartered in Japan. And we have 8 or 9 North American utilities as customers. So due to the network effect, that's driving each other. I think what is particularly exciting is that we have a new offering that's called Taulia Enhanced Discounting. It's our supply chain finance offering. And so now through a single platform, you're able to address all your suppliers for both e-invoicing and portal, but also working capital finance. And it can be a combination of use your own money where you want to and in phases where you have it. And then when you don't, we have a multi-funder platform to bring capital to the table from third parties, from banks, from pension funds, from institutional investors. And we do that in a competitive form such that it is the true market rate.
And what are you seeing pull-wise? Are companies generally using their own cash, or are they looking to use the cash of a third party?
It's a very interesting question. And maybe that would have been the way we would have looked at it half a year ago. What we know today is most people want a combination of the two. They want to use their own cash for part of their supply chain, and then when you have really, really big dollar transactions with your largest suppliers, that is where the banks typically played and played well. You don't want to use kind of hundreds of millions of your own cash to fund that. That's typically where banks and outside providers come in to fund the very large segment of your largest transactions. Yeah, and so from our perspective, providing a platform that can handle both is a huge competitive advantage.
I was going to ask you actually on the competitive advantage, because there are other players out there who provide dynamic discounting, supply chain financing. What do you think separates Taulia from the competition?
I think it's probably three things. Number one, from all we know and all we hear from our customers and also from converting customers away from other players, we have very, very high adoption rates compared to the market. We have not only adoption rate often above 90% for customers we sold 2 years ago, we have across all our customers an average of 47%, and that is impressive because the median seniority of our program is less than 12 months old, given that we double our customer number every year. And so that is, I think, an impressive stat to have 47% onboarding rate across the board, even though our majority of our programs is young. And the driver for that is, of course, one is we don't charge supplier fees. And the other one is I think we have a superior value proposition often by combining portal, e-invoicing, visibility, and the ability to get paid as soon as the invoice is approved. It's just a complete solution suite for the supplier. And then from a buyer perspective, it's seamless integration. We have reliable implementations. Everybody went live at the target point in time. And everybody who ever went live is still with Taulia, and many upgraded, but nobody has ever left Taulia. So implementation strength is one thing. And then the ability to be flexible, use your own cash or use third-party cash with a single platform is the newest advantage we've brought to the market.
So final question for you, Bertram. In the next 12 months, where do you see the pull as far as what will be the kind of the key developments in this market? Will there be one industry that has a stronger appetite for this? What's your view on the next 12 months?
I think it's a pull across industries. From our perspective, this is going to be an internationalization play. In dynamic discounting, if you look at all customers who do dynamic discounting on a global base, they're strongly concentrated in North America, and that is just driven because the concept originated here, and so, that's where the most traction is. But the value proposition applies equally across the globe, so we're bringing it massively to Europe and building up and scaling our organization, fivefold, and the pull will go further into all other regions and continents.
Bertram Mayer, thank you very much indeed.